one of the big questions we get asked from our clients is it risky if they go with a smaller lender? And often we do recommend smaller lenders, not just the big four. And the first thing I would say to that is it very much depends who the lender is. There's a lot of smaller lenders out there, and most of them are creditable and have a strong track record, but it's really important to have a look and see, okay, what sort of history do they have in operating? If they're an ASX listed company, I think the risk of them getting into financial trouble is probably very low. And if they did, you're not investing money with them, you're borrowing it from them. So it's likely that your loan would actually get sold to a different institution altogether. So the risk is relatively low with that regard. And then have a look at where they get their funding from. So how do they get money in the door to be able to lend out for home loans? Do they get it like the major banks through people putting money in their savings account and then they lend that out, which is called balance sheet lending? Or do they borrow money from other banks and then lend it out that way? So finally, I would have a look at their technology. We do find with smaller banks, sometimes their apps and their internet banking facilities aren't as good as the major banks that have more money to put into those sort of products. So if that's really important to you, more of a mainstream lender might be appropriate. But the track record is the big thing to look at with small lenders.